All right, welcome to today's home buyer seminar. This one is specifically targeted for educators. I'm Lacey Rushin with Rushin Realty Group, and we are offering this presentation to you free of charge with our preferred business partners. You'll hear all about the wonderful services that they add to what we offer in the home buying process. This will give you an overview, a high-level overview of kind of what to expect before you start looking for houses, and then what to expect when you're under contract. If there's any questions you have at any time, feel free to put them in the chat or pop in and ask questions as you need to. We'll go ahead and get started. Kelly, if you want to wave, Kelly is also a member of the Rushin Realty Group on here today to help us. And then everyone else will kind of introduce themselves as they go along. This is just a flyer that we put out with the Rushin Realty Group as far as what we're doing for social distancing and showing houses at this time. And then you've got all the other members of the Rushin Realty Group there at the bottom and their phone numbers. Everybody else is out with clients today, so feel free to reach out to anybody anytime that you need something. Oh, it isn't changed yet. Hold on a second. So benefits of shopping with a realtor are scouting out new listings, ones that are on and off the market, accompanying you on tours, providing inside market knowledge, negotiating on your behalf with the seller, offering advice about a home warranty, vendor recommendations, movers, repairs, lenders, insurance. Everybody that's on today is somebody that we trust and value as partners in our business. Access to new home builders, providing information about schools, taxes, and utilities, negotiating potential repairs to be paid by the seller, answering questions along the way, and accompanying you at closing. One of the other things that it's important to know in the state of Texas is that you as a buyer do not pay to have a real estate agent. That is the seller's responsibility. So it's actually not in your favor to not have an agent at all. Even if you don't end up using us, please use someone because they will guide you along the way and it is at no cost to you. Steps to home ownership. So this is just a high level kind of airplane view. So you get pre-approved with a dependable lender. That will tell you how much we have the opportunity to spend, so we can focus on those areas in your price point instead of looking at a 200 when you're qualified for 400,000, or vice versa. We're looking at 400,000 and you can only spend 350. So that's the benefit to starting that ahead of time, as well as making sure that your credit is where you are, so you're not 2 weeks from having to move out of your house or your rental and we have to find a house, because it's really about a 30-day process. Meet with your realtor to discuss needs and wants, tour homes and open houses, find a home you love. Your agent will do a market analysis and pull the tax record, the survey, and the seller's disclosures. Will help you make an offer, receive counter offers, and accept an offer on your behalf once you've all agreed. Once all parties sign and initial the final changes, the contract will be dated and the clock starts. Home inspection and option period will be listed on the contract. We'll talk more about those in a minute. Negotiate any repairs, finalize the loan, including appraisal and funding, and celebrate with you on closing day. All right, I'm gonna let James take it away and talk to you about the lending process.
All right, thanks. Thank you, Lacey. Yeah, my name is James Hoagland. I'm with American Mortgage. I am a small broker company here I say I'm in Frisco, but basically all of Texas. I've been doing mortgages for 19, going on 20 years now. And I've worked in the small shops like I am right now, and the big banks, and then the mid-size. I've worked nationally. So one of the benefits of working with a mortgage broker, I don't know if that's a slide up here, but it just made me think about it. Like, why don't I call Bank of America or Wells Fargo, or why don't I go to Chase or something like that? Or somebody who's not a broker. As a broker, everybody's got the same access to all the different programs out there. There's a very few niche products like this one bank might offer for a certain clientele of its, like doctors or something like that. But for the most part, if there's a program out there, we all have access to it. They're all, once again, for the most part, these aren't definitive statements, but just for the most part, they're all regulated by governmental agencies, Fannie Mae, Freddie Mac. Ginnie Mae, and then the Federal Housing Administration. So whatever they set the rules, and then we kind of take them to there. The difference with the broker is I work with about 52 different investors. And so depending on your situation, some investors may want different criteria. You know, the guidelines say XYZ, but they may want XYZ plus 1, 2, 3. And some just want that. So we have the ability to kind of move things around and get you where you fit, still within those guidelines, but without having to worry about what we call as overlays. Also, some days rates are better with one investor than they are the other, depending on their market appetite. So we have the ability to kind of move things around to make sure you're always getting the better rate. Also, we're smaller. You deal with me, my processor, and that's basically it until you get to closing. And that's one of the reasons why the real estate agents I work with do enjoy working with me as well too, because here it is Saturday at 2 o'clock. If we weren't on this call and one of these ladies needed me and they call me, I'd answer. I'm available on Sunday, you know, in the nights and weekends too. And you have that access as well too. When you're working with the bigger banks, you don't always have that access. You got to wait till business hours on Monday or whatever. So, but we've got 3 renters on here, and I know all 3 of you have mentioned, you know, buying. So you probably know some of this already, but the way I look at it, when you're looking at renting versus buying, you're already paying a mortgage already, whether it's yours or somebody else's. You're building up equity for somebody. Even if it's an apartment complex, you're paying off their mortgage for them. So why not have that ownership of your own? And there's statistics about net worth and how homeowners are more higher than net worth scale, and it all comes back to the ownership of a home. It builds equity. It's some people look at it as a retirement fund or part of retirement fund because of the equity in their house they're building. And then also there's a lot of big tax advantages as well. And because I'm not a licensed accountant or CPA, I can't tell you exactly what these are, but I've been doing this for a long time, and I've been a homeowner for a long time. Typically the interest, the taxes and insurance, and the closing costs from a loan are deductions you can take off of your home. Also right now, if you're not a homeowner, you're probably doing the standard deduction for a single or a married couple. When you can start itemizing your deductions with all the other stuff, now you get bigger tax breaks. So we can really get off into that, but we won't. But once again, be your own landlord, right? It's your house. You want to paint a pink room? Do it. And when I first bought my first house with my wife, she wanted a pink room. Although pink is my favorite color. We had a pink room, you know, didn't have to worry about painting it back a different color before we sold the house. So there's a lot of stuff going on there. Some of the top mortgage questions, the number one question, these are probably tied for 1 and 2, is when should I apply? And this is really going to address you, Rebecca, and then you as well, Nicole. And how much do I need for a down payment? So I always tell people the moment you think you might want to delve into home ownership, that is the time to apply, right then and there. Rebecca, you said you're not going to be ready until December. That's okay. Apply now. That doesn't commit you to the process, but what that does, it allows us to pre-approve you, know what your budget's going to be, what your payment wants to be, how much money you have, or how much you're going to need to save up. We can tell you pretty closely, hey, you need to have $13,000, you know, by December or whatever. It gives us those benchmarks we can work for. Also, a lot of times we work with people that have credit issues, and David will talk about this in a moment, but I would rather find out about your credit issues in January, February, March, or April when you're going to buy in December, so we can attack those now and be proactive instead of reactive. The worst thing to do is you call me up, and I'm not saying it's going to be the case, but when you call me up in November, say, hey, my lease is up, I need to be out by December 15th. We pull your credit report, and we just have some stumbling blocks that are going to take longer than 30 or 45 days. So I always tell people, when's the right time to apply? Right now. Also, this goes into how much you qualify for. The other biggest question is, how much money do I need to have saved up? And there's a large percentage of people in the nation that think if I don't have 20% saved up, then I have to wait. And that's absolutely not true. There's a lot of different programs. The number one program out there that's better than any other program, it's the VA home loan. And if you or your spouse is a veteran and has those benefits, that's absolutely the best deal out there. There's no down payment required. There's also a USDA home loan that doesn't have a down payment requirement either. But depending on where you're at, the home may not be eligible for that. But then you're looking at 3 to 3.5% will get you into the game. So if you're looking at a $200,000 home, then you need $6,000 for a 3% down payment plus closing costs, 2 different things. But the way we figure out how much you qualify for is I don't go for a loan amount. I say, where do you want your payment to be and how much do you have to play with? And then I work backwards from that. And we get you to hey, $225,000 is going to be the home price that you need to shop for based off the payment you want. Or you can say, hey, we want to go much higher, and we just kind of work back and forth. So it's not just hey, how much do I qualify for, James? I make $62,000, and I've got $8,000 in the bank. We've got to look at your debt, your credit history, how much cash you have available. There's really a lot that goes into it. And all those things listed on the screen right now, all those things go into affect your interest rate as well too. So third biggest question I get is, what's your rate today? I have no idea. Depending on your credit situation and everything else, the interest rates are unique as fingerprints. So nobody really gets the same one. They do, but there's so many factors that go into it. This goes back to the down payment question I was just talking about a minute ago. There are even down payment assistance programs out there to help you come up with a down payment. It usually doesn't cover it all, but it can knock out a big chunk of it. And why don't we use those for everybody? It's kind of give and take. So we're give and take. So we look at it and see, okay, is this best suit you, or is it more financially, is it better to use my own funds? And we look at that and we kind of help guide and direct you. And then there's even times when the seller can help pay for closing costs. I give credits to teachers and vets. So we even do credits to help offset that. And then, the downfall of not having 20% is paying PMI, but that's not a downfall at all. What that does, it ensures the lender and allows you to come into a transaction with only 3% or 3.5%. So, don't let the down payment question be the determining or the deterrent, and don't let the time sit there and dictate your option too. Let's talk now. Let's see how much you need. Let's do everything else and get you ready for when the time is right. I mentioned down payment. I mentioned closing costs. So if, let's say on a $200,000 house, you need $6,000 for your down payment, right? Well, you need more than that too, because there's going to be about, anywhere between $3,800 to $5,500 in closing costs. And those are made up by lender's fees, appraisal, inspection, taxes and insurance, title insurance, and the seller pays for some of that. So don't get overwhelmed by seeing all these numbers or hearing all these things going, oh my gosh, I got to pay for all this stuff. Not necessarily, but we have to disclose all that up to you too up front. So, you got Tim on here that we collect insurance up front too. So we always want to make sure the house is insured. So there's a lot of different things that go into the closing costs, but don't let it be intimidating, and like I said, don't let that number deter you from it. Let's make a plan. I always say you can't fix something unless you know it's broken. And I always go back to the movie, The Storks. Make a plan, stick to the plan, and deliver. And let's do that. Another thing is how does my credit factor into loan? And David can talk about this, but your credit is paramount. It's absolutely paramount. And I never realized that until I got into the mortgage business. I probably had some of the worst credit you'd ever see, just because I'll pay my bills when I can. I was in the nightclub industry, but now it sets the tone for everything. Income, assets, and credit. That's the three biggest factors. So, applying early allows us to see if we've got any credit issues. If not, we're good. If we do, then we get you into contact with a great person like David, who I've seen do some amazing things and brought us from where we had no chance to all of a sudden we're ready to go. So as important that it is, don't let the thought of, well, I've got bad credit. Let me wait on this. No, talk to us now. Let's be proactive. So, yeah, right there, that tells you everything about the credit report and what it shows. But yeah, okay, last thing, and I'm gonna let you guys go because we've only got a few minutes. And pre-qualified versus pre-approved. Ladies, I can talk to you in 5 minutes and I can pre-qualify you for an amount and tell you, that's gonna be about your payment. You wanna be pre-approved, and that's the only thing I do, where we look at your income, your assets, your credit, we pull all that and we underwrite it and have an approval, so we know when we're going out and making that offer that we're good to go. It still has to go through underwriting approval, full underwriting approval, but it gives us a really good chance, or it gives us a great starting point where we're offering that agent an offer from one of your real estate agents that you mean business, and it carries a lot of weight. Once again, that goes back to working with a local broker versus one of the big banks. The listing agents know that they can get a hold of me on the weekends as well too. So if they've got a question or concern, they can always call me up. I can talk for hours and hours about this, and I think I've went a little bit farther than my time. But even if you've got a lender friend and you're working with it, you've got my contact information. If you have a second question or a second set of eyes, please feel free to call me. I'm happy to provide that service for you as well. So I do appreciate you guys showing up today on this Saturday afternoon. It's beautiful outside. I know we've got some options, but I've kind of taken up some time, Lacey, so let's just go on through that if that's okay with you guys. I kind of hit all these already anyway.
Yes, that's fine.
Okay.
And you're going to get all the information too.
Yes.
Yeah, and Kara, I said I would answer your part. I will follow up with you on that. I'll shoot you a private message here in just a second too. So I said I would address it and I didn't. I apologize.
All right. Next up, David Rodriguez is going to share with us about tips and tricks for credit history and things you can do to get on the right path.
Hello, everyone. My name is David Rodriguez. I'm with the Phoenix Group, and basically my job is to help create homeowners. Specifically, I'm a resource for mortgage professionals that will assist with their potential buyers or borrowers that are having issues with qualifying due to low credit scores or issues on a credit report. And most people that I speak with, they're usually dealing with credit issues such as late payment history, old medical bills, collections, charge-offs, things of that nature. I also assist with getting student loans back on track. A lot of people will put student loans in deferment, and before you know it, it can turn into an issue. Or several times I've had people that have their student loans just sitting out there and they don't really know what's going on with them. So whatever the case may be with the student loans, I have avenues to help assist with that. But basically, my job is to prepare somebody for the home buying experience. Now, one thing that if you guys are feeling like you may have some questions or concerns about your credit, then I do offer a free credit analysis and a consultation. My job is to help, whether that means developing some sort of program for you or just giving you some sound advice and kind of pointing you in the right direction how you can take care of it on your own. Whatever it means to, or whatever I can do to help get this process rolling for you as soon as possible, I'm here to help for that. And so what is credit? Credit is it's a numerical formula of points based on payment history, and it ranges from 300 to 850. Now, more importantly than that, your credit score is a record of your history. It is a risk factor given to you based on what you have done with your accounts in the past. And we can kind of go to the next slide here, Lacey. The three major credit bureaus are Experian, Equifax, and TransUnion. So, here, Lacey, can we? There we go. So the three major credit bureaus are Experian, Equifax, and TransUnion, and these companies are basically for-profit companies. They are not government entities, and they are strictly here to report information to your credit file. And each one of these companies will issue a score for you. And a lender is going to be pulling your credit from all three of these bureaus, and they'll take a look at that and see where you actually sit. Now, there's different types of accounts that will report to your credit file. To sum it up, there are two types. There's a revolving account and there is an installment account. Your installments are basically any sort of loan that you get that has a high balance and you make a consistent payment to it, and it has an eventual payoff date. This is going to be your mortgage, your auto loans, your student loans, certain personal loans, things like that. And then there are revolving. Revolving are open-ended credit accounts such as credit cards. This is something that you absolutely have to manage. You will also have to, make your payment on time, and the balance will adjust according to your usage. When it comes to establishing your credit, the biggest piece of advice I could give to somebody is, and it's pretty elementary, pay your bills. because payment history is the biggest portion of your credit score. One late payment today can be completely detrimental to your buying power. And that is a phrase that I like to use because I've seen people with good credit scores that cannot get financing. We want to set people up with buying power. So payment history, one late payment today could potentially drop your scores anywhere from 50 to 100 points, if not more. It is worse than getting a judgment. It's worse than filing bankruptcy. You will see a bigger score drop from missing a payment. So whatever you guys got to do to make sure that your credit cards are paid on time, your auto loans paid on time, set that stuff up on auto pay. Let them take their money. They're going to get it anyways, right? So, you know, the payment history is going to be the biggest portion. Now, you can manage your debt by keeping your balances low. You can pay them off in full. Now, one piece of advice I give to people that have credit cards is you will want to always carry some sort of a balance. I tell my clients, when you're in my program, we've got to keep your credit cards between 1 and 15% utilization. That is going to be very good for your DTI. It's also going to be very good for helping you grow your score month to month because you're always having a good utilization. Nobody wants to be carrying big credit card balances because that monthly payment, if you got a $350 minimum payment due on your credit card, a lender will look at that, and that is going to be something that will affect your DTI. So managing the credit, keeping your balances low is very, very important. So so preparing your credit before buying a house, one thing that you want to do is obviously you talk to your loan officer. They are going to pull your credit, do some, see where you stand, and if there's any issues with your credit score being low, then we need to do an analysis and see what it is that's keeping your scores down. The perfect mixture of credit is typically 2 installment loans, which this at the end of the day are going to be your auto loan and a mortgage is typically your 2 installments, and then you'll have 3 revolving credit on top of that. So 2 installment loans and 3 credit cards set somebody up for the perfect mixture of credit. Also, like I was mentioning earlier, you do want to pay down those credit card debts. You don't want to carry big balances all the time. Closing out credit cards, if you've got a credit card that you're not using but you've had it for many, many years, your average age of accounts is very important. And if you close out a 5, 6, 7-year-old credit card today, even if it was a small balance, you would probably see a pretty drastic drop in your score. So you want to keep these lines open, always have a little bit of activity. That's why I tell people to keep at least 1% always on your credit cards. When you're preparing to buy a house, you do not want to go and apply for anything new, simply because like some people that I talk with, they will say, well, David, you know, to clear up some DTI, should I go and pay off my auto loan? Not necessarily. You want to keep that payment. You want to keep the account open because the minute that you pay off that loan, your score will drop because you're losing the active payment history. So, you know, don't go and pay off. Now, in certain cases, it could be beneficial, but for the most part, just stick to your agreement. You have an agreement to pay it for X amount of months every month. Go ahead and continue with that. The other thing is, and we've all heard it, if you're going to buy a house, don't go and open up any new lines of credit. Having the inquiries, just applying for it is going to cost you some points. Also, you're going to that account is not going to help you until you have several payments into it, probably about 6 months of a payment history made for the account before it will start to be beneficial. So, you know, if you're planning on buying a home, just pay down your credit cards, make sure you're making those on-time payments, don't apply for anything, and don't talk to anyone about your credit other than your lender or some sort of credit professional. So, and if there's any questions that any of you have, feel free to reach out. Like I said, I do a free analysis, and even if it's just some sound advice that I need to give you, or you have questions about how to go about increasing your scores, I'm here to help for that. So for joining us today. And I look forward to speaking with you all.
Thanks, David. Thank you so much for all of your information.
You're
The
very welcome.
next thing we want to talk about is choosing your perfect home. And there's some things that you can do yourself that will help your transaction go, or your search go a little smoother. And the first thing is to make a dream list. You need to know what you want in a house. And if you go to Zillow or you go to any site, or you contact your real estate agent and say, hey, I want to, start a search so that I can see what houses are out there, and kind of make a list of the things that you want in a house. Do you want a 4-bedroom? Do you want 2.5 baths, or do you just want 2 baths? Do you want an open kitchen or a galley kitchen? Do you want a big backyard? Do you want a pool? And include the features that you want, including your neighborhood amenities. Do you want one with a park? Do you have small kids that you need to go to the park? Do you want to take them to the pool? Do you want to live in the same neighborhood as your school? And visit the local stores, churches, schools, parks. Find out what's in the neighborhood that you're looking at, so that you don't want to wait until you buy a house and you get there and there's, you hate the neighborhood. Your church is 18 miles away and the nearest park is in Oklahoma. And drive around at night and on the weekends and see what's going on in the neighborhood, so that you need to know if there's loud parties going on or things that are going on in the neighborhood that you may or may not like. You may drive around and you may like the loud parties, so you may want to stay there. Ask the neighbors about possible things that you might not have noticed. You can look at an aerial view of the home to see if there are things such as train tracks, sewer treatment facilities, or commercial areas that may be too close. There may be industrial, something that you just can't, it's a deal breaker. You don't want to live there. You can also pull up crime rates and statistics for the neighborhood. There's a lot of different websites you can use to find out the crime rates. And ask your realtor for a market analysis and see what homes have been sold or taken off the market in the last 6 months. Let's see what's next. Money you will need. One thing you're going to need is earnest money, which is normally about 1% of the sales price of the home. So if your home is $300,000, you're going to put down 3%. Also, you're going to need option money. And that ranges from 100 to 300, depending kind of on the price of the house and the likelihood that you will, not go all the way through with the process. But that buys you 7 to 10 days of time that you can pull out of the contract for any reason. If you don't like the inspection report, if you drove through the neighborhood and decided that you didn't like the neighborhood for any reason in that time period, you do lose the money if you exercise that option. But if you don't, that money is credited back to you at closing. So if you go ahead and go through the whole process, you do get that money back. You'll have an inspection that will be done within the option period, so that you know everything that's wrong, that any issues that the house may have, that's going to be probably $400 to $500, depending on if it has a pool, if it needs a termite inspection. VA does require, if you're a veteran, it does require that you have a termite inspection. The other thing that you're going to pay for is an appraisal. That's in the vicinity of $500 to $600. And your down payment, which you'll discuss with your lender, how much you're going to need. You're going to discuss that with James, and he's going to say, okay, you can do this for 3.5% down or whatever. Then you know exactly how much you're going to be putting down. And then you also need closing costs. And like James talked about, it can range depending on how much your appraisal is and all that. And all of that is disclosed to you before closing. When you make an offer, when you found the house you want, it's in the neighborhood you want, you got the parks, the church, you've got everything you want, you decide to make an offer, your real estate agent is going to help you determine what the best price is going to be. They're going to pull the comps for the area, and so that we know what houses are selling in that market, so that you're not overpaying or, because we don't want to run into appraisal issues. It's also important to remember that if there's competition for the house, if there's more than one person that wants the house, you're going to have to pay a little more, because you're going to have to kind of outbid those other people. So that could mean that you're paying full list price, or maybe just a hair over list price in order to make your offer the strongest. And once the seller accepts your offer, it does become a legal contract. When you're, this is a calendar. Oh, are we going back? Okay, so when your offer is accepted, it'll have an execution date, and that's when the clock starts. You'll have 3 days to get your earnest money to the title company, which your real estate agent will help facilitate that. You are going to pay your option money to the seller, which your real estate agent will also help you facilitate that. The funds that you have will be paid to the title company for your earnest money, and they're going to hold that money in escrow until closing. And then that money is credited back to you at closing. And then that's when we're going to get Dion involved, and he's going to talk to you in just a few minutes about inspections and why you need to have a house inspected and what all is involved in that. But that is also done once your offer is accepted, because you do want to get that done within your option period, so that if there are deal breaker things that are wrong with the house, you have the option to back out without losing your earnest money. This is a calendar that's a 30-day calendar that, and sometimes, you know, closings can be dependent on financing. Closings can take more or less than 30 days, but this is just kind of general. And it's a calendar that kind of goes through the process so that when you don't hear from your agent or anybody in week 3, you don't start freaking out, because really everything is going on in the background by then. Everybody's trying to get all of their ducks in a row to get ready for closing. So week 1 and then usually the week before closing is when you're going to have the most contact with everybody. In the meantime, just know that everything going on in the background is happening for a reason. Everybody's working really hard to get things done for you, so that you can get to the closing day somewhere around day 30 to 45, somewhere in there. There are 10 commandments of buying a home. Now, there's probably more than 10, but we're going to just go over the top 10. Thou shalt not change jobs, become self-employed, or quit your job. Just because you have a contract on a house does not mean that you can be a freeloader now, because you have to make that house payment. You do got to keep your job. Thou shalt not buy a car, truck, or van, or you may be living in it. You don't want to make any changes to your credit score or incur any more debt that could cause your debt to income ratio cause you not to qualify for that house anymore. You should not use credit cards excessively or let your accounts fall behind. Just because you have a contract on a new house does not mean you can stop paying for your old house. You have to keep everything current so that nothing affects your credit score. You should not spend the money you have set aside for closing, because when you get to closing, they're going to require that money. So unless you have the ability to come up with, $5,000 or $6,000 in a moment's notice, you need to make sure that you keep that money aside for closing. You should not omit debts or liabilities from your loan application. James will find out about it. You have to make sure that everything is on the up and up, and it's better to deal with it in the beginning than to get to the very end and have to extend closing or cancel the deal because something came up that wasn't dealt with earlier. Thou shalt not buy furniture. This goes back to spending the money that you have set aside for closing and credit cards excessively and anything that can change your credit or large amounts of cash going in and out of your checking account. You shall not make large deposits without talking to your loan officer. Any deposit that goes into your account other than your direct deposit that normally comes in and out of your checking account has to be verified. So if you put, if your grandmother decides she wants to give you $10,000 so that you can buy some new furniture and that goes into your checking account, James needs to know before, or your lender needs to know before you put that money in, because that money has to be verified of where that money came from. And if it is a gift and your grandmother says, hey, I want to give you $10,000 for your closing costs or your down payment, then that's great. But we have to be able to verify that, and it has to be documented. One thing I missed was don't originate any inquiries into your credit, because that can change your credit score. Also, changing bank accounts can affect everything that goes on. You also don't need to co-sign a loan for anyone, because that's going to, you may only be co-signing, but you have to add that into your debt to income ratio. So you don't want to co-sign on any loans and take on any additional debt while you're in the process of getting a mortgage. Or like I said, you'll get to the very end and James will say, "Oh, sorry, we can't, this happened and now we have to extend closing for 2 weeks, or, get a bunch more paperwork or more letters, or it'll be trying." So that's the 10 commandments of buying a home. And now we're going to talk to Dion, who is the Cornerstone Property Inspections. He is the guru for property inspections. So we're going to let him tell you why you need to have your property inspected and what to expect.
Well, thank you, Carrie. Thank you for the guru-ness there. I don't know if I would go that far, but. So, hi, everybody. I'm Dion. I'm with Cornerstone Property Inspection. I'm the owner and general inspector for the business. So essentially, I want to hit on a couple of things, and I'll just start off by mentioning what is a home inspection. Okay, so as defined by TREC, or the Texas Real Estate Commission, it's basically a limited visual survey or basic evaluation of the systems and components of the building or the property, using the normal controls like water fixtures, using your eyes to look at different various things that you can see around the house to conclude the general condition of the residence at the time of inspection, okay? And with that, essentially what we're trying to do is just figure out what's going on with the property so that you have a neutral point of view before going in and making that large purchase as to what you're actually buying. You want to know, hey, is there a water heater that really needs to be replaced, or is the roof in bad shape? So there's a lot of features to a house. You have a foundation, you have a roof, you have little features as far as water fixtures, you have a dishwasher, carpet. I mean, there's so many things that goes into a house. So we come through and we look at essentially all of that. And so there's 5 big categories that really hit home, I think, here in North Texas at least. And that's going to be your foundation, which is very important just from a cost perspective, and then from the structural integrity of the house, okay? Your roof, your furnace, and your air conditioning, and then your plumbing and electrical systems, okay? So those are the big items. We go through everything though. Now, what that inspection provides for you is obviously a value as far as peace of mind. You know what you're getting into and you could prepare for that. It also gives you that neutral point of view. So nobody's trying to sell you anything or get anything by you. It's just purely information so that you know what to get, okay? And then also what makes a good inspector. Somebody like myself, I really like to take the time to teach people what's going on. Kind of like the Russian real estate team. These guys are educators. You guys are educators. And so to take that time to answer questions to help you all understand what you're getting into is key and paramount from my perspective. And I think that's valuable information for you guys when you're getting into the house as well. You obviously want somebody who's professional, who's detailed, who can get their point across to you and help you understand what you're getting. And then we'll take the time to answer those questions. What we do here at Cornerstone Property Inspection is we provide you with a written report that has a nice summary at the end that just highlights every little detail that we found in the house, whether it's a large issue or a small issue, so that you have it and you kind of have a checklist, even for small handy repairs you want to make down the road if need be. So that's kind of that there. Now, as far as the types of inspections that we can offer, we generally do pre-owned homes. We do new construction, which there's a whole gamut of inspections you can do with that. We can do swimming pools, septic systems, water wells. Out in the country, if you have a barn, we do that as well. So we can get a pretty good idea of what's going on with the house before you get in there. If you all have any questions for me, my info is there. You are welcome to call me anytime and pick my brain. And then generally at the end of the inspection, we invite you out or at least to do a FaceTime phone call to review everything with you so that you can get some context as to what's in the report and have a good idea to go negotiate with your agent or, make a decision from that point. So that's all I got for you today. I hope that wasn't too fast, and I hope
It was
that was
perfect,
good
Dion.
information.
You did a great job. Thank you so much for that information. So now we're going to talk to homeowner insurance specialist, Tim Bicknell, who is going to tell us why why we need homeowners insurance, how to get it, who to talk to, and why you need it.
Thank you, Carrie. Can you hear me okay?
We can. Thank you.
Okay. Been battling a connection here, so I got on the cell phone instead. Thank you guys for giving up a little bit of your Saturday to chat with us. We'll go quickly over what home insurance is, and kind of the biggest question we feel like most people ask is, how is the cost calculated for a home insurance policy? So home insurance is basically a policy set up similar to your car insurance to take care of the catastrophic things that could damage your home. Things like in North Texas, the most common thing we think of is the wind or hail risk that we have here in North Texas, but it can also go to things like fire, lightning, theft of property from your home, water damage inside your home. So home insurance is designed to cover all those major things that could happen to either your home or your belongings in your home. And I would say that a majority of people we talk to that are first-time home buyers have no idea that home insurance rates can be very different with multiple companies. I'm an independent agent, so I have 30 companies that if I quoted one home today with all 30 of those companies, you would get 30 dramatically different rates. So we want to paint a real quick picture for you to let you know what goes into the factors of the home insurance cost for you. And again, if you're a first-time home buyer, more often than not, your home insurance cost is going to be rolled into your mortgage payment and as part of escrow. So here's a few factors that we've put on the screen for you guys. Age of home is a pretty big factor. A brand new home is typically the cheapest home insurance policy you're going to find in Texas. And everything I'm going over here is very specific to Texas and probably a little bit more specific to the North Texas area. This can dramatically change if you buy a home in Michigan compared to here in Texas. The value of a home is a big factor in how much the home insurance cost is. If I bought a $100,000 home compared to a $1 million home, that $1 million home is going to have a much higher insurance cost. Location, this is real important in Texas. If you live in the Houston area near the coastal area, you might be more prone to having that home in a hurricane zone. So that location could definitely add up to a higher insurance cost than maybe someone who lives out in San Antonio, where we're really not afraid of tornadoes or hurricanes there as much as we are other locations. This is the common one, multi-policy discount. If you have more than one policy with your home insurance carrier, you typically get a large discount. So for those of you that are renting, I think we saw some of the comments that you're currently renting. If you have your auto insurance and your renter's insurance, you're getting discounts like that. That's a multi-policy discount. The same thing is true for home insurance. If you carry an auto policy and a home policy with the same insurance company, there's going to be a large discount for you there. Claims history is a big factor. So even though you haven't been a homeowner yet, if you make a claim on renter's insurance, that is considered a home insurance policy, just not a homeowner's occupied policy. That's something that can affect your claims history. So we're real cautious about letting people file very, very small claims, because very small claims can affect you for 4 or 5 years, depending on who you're insured with. And James and David touched on this. Holy cow, this is going to be a credit seminar, isn't it? Credit has a huge impact to insurance rates. We don't want to hear that, especially if our credit's not perfect, but your credit absolutely has a factor in your auto rates and your home insurance rates. So a person with great credit buying 123 Main Street and a person with bad credit buying 123 Main Street are going to have 2 different insurance costs for that home based on their credit. Other personal information that can affect a home insurance cost is your age, marital status, your occupation, things like that. Different companies target different audiences that they want to grow their business. State Farm may have a target audience of, we want to give our best rates to 55 and older crowd, and someone like Travelers is trying to get into the millennials, so they want the 20-somethings. They may target that audience with better premiums. So you may not think of it that way, but your age absolutely can be a big factor on home insurance costs. And these are also real similar factors on your auto insurance. If you look at some of these things, the age of a car, the value of a car, the location that you stay in, if you have multiple policies, claims history, these are all real interchangeable for how your car insurance works as well. So I hope that painted a very, very, very quick picture for you for home insurance and how that builds into the cost of what you're going to be insuring that home for.
Thanks, Tim. Appreciate that. Now we're going to hear from the beautiful Victoria, and she's going to tell us why you need a home warranty.
Oh, thanks, Carrie. I'm Victoria, and I'm with Fixed Home Warranty. The information is there if you have any questions. But yes, what is a home warranty? Home warranty is simply there just to help protect you. Coverage typically applies to any major appliances along with plumbing, heating, AC systems that break from normal wear and tear. Just think anything mechanical is what home warranty would help you. So what's the purpose of a home warranty? It's to help protect you from high unexpected cost. Anything major mechanical systems, appliances that would not be covered under your homeowner's insurance. A lot of people do confuse your homeowner's insurance and your home warranty. So again, like I said, think anything mechanical is what home warranty would help cover. But it's also to help provide an easy, convenient way for homeowners to obtain a service on their home for reliable repairment, and then also to provide you as a buyer with peace of mind on one of your biggest investments, and that's your home purchase. So what's covered? AC, heating, duct systems, plumbing stoppages, water heaters, anything in your kitchen, thinking range, oven, cooktop, dishwasher, garbage disposal, built-in microwave, electrical systems, so your ceiling, exhaust fans, garage doors, and it would cover anything unknown that was pre-existing, and also covers AC and heating tune-ups, rekey services, pool and septics. And then just know home warranties provide great coverage, so it's important features in your home. And so just make sure that you understand what is completely covered before you make that actual decision on your home warranty when you decide to pick one. But the benefit of having a home warranty, it's good for homeowners that are in these situations. You have appliances that are getting old. Your house is 5+ years old. You don't have the patience or time to get a repair done on your own home. And you don't have a trusted contractor, and you don't want to go through the process of screening and calling to make sure that they're trusted and they're reliable and they're going to show up. Also, maybe you don't have the cash on hand to handle any costly repairs. So just think your AC or heating unit breaks down, and we all know we need that in Texas because it is hot here. But it breaks down, you need to replace it. It can cost anywhere from $6,000 to $14,000. So if you had an agreement with the home warranty, it would be the warranty's provider's responsibility to replace that unit. And then when you're buying your first home, and then lastly, the protection of unexpected repairs.
Thank you so much, Victoria. We appreciate your information as well. Matt couldn't be with us today, so we're just gonna zip by his slides and we're all done. We're right here right at 3 o'clock, so we managed to get a ton of information in there that hopefully you'll find useful. If you have any questions, you can contact any of us. That our information will be in the slides, and we will be sending that out to you when this is over.
Thanks, Carrie. Carrie did not get a chance to introduce herself. She slipped in late, but she is our Rushin Realty Group tech leader. As you saw, as soon as she swooped in, she saved me from the disaster that is Lacey's Rushin's technical skills. So thank you.
Sorry I was late.
All right.